Have you ever wondered how people make money while they sleep? How do ordinary individuals, people like you and me, turn small savings into millions over time? The answer is simple: the stock market. Now, if you've always thought that investing is too risky, too complicated, or just for the rich, stay with me, because today I'll break it down step by step in the simplest way possible. By the end of this video, you'll know how the stock market works, how to invest safely as a beginner, how to avoid costly mistakes, and how you can start investing right now, even with just $50. But before we dive in, let me ask you this. If you had invested just $1,000 in Amazon back in 2000, do you know how much it would be worth today? Pause for a moment and take a guess. Hold the answer until later. All right, let's get started. Part 1. What is the stock market? Think of the stock market as a giant shopping mall, but instead of buying clothes or electronics, you're buying ownership in companies. A stock represents a tiny piece of a company. When you buy a stock, you become a shareholder. That means if the company grows, your share increases in value. But the big question is, how do stocks actually make you money? There are two main ways. 1. Capital appreciation. This means the stock price goes up over time. 2. Dividends. Some companies pay shareholders a portion of their profits. For example, if you had bought one share of Apple in 1980 for just $22, today it would be worth thousands of dollars, not to mention the dividends you'd have received over the years. Now you might be thinking, that's great, but isn't the stock market risky? Yes, it can be risky, but only if you don't know what you're doing. That's why in the next section, I'll show you how to minimize risk and make smart investments as a beginner. Part 2, how to invest in stocks the right way. Step 1, choose the right investment strategy. There are 3 main strategies beginners can use. 1. Long-term investing, buy and hold. The safest and easiest strategy. 2. Dividend investing, great for generating passive income. 3. Index fund investing, best for beginners who want steady, reliable growth. Step 2. Open a brokerage account. To start investing, you need a brokerage account. Some of the best options in 2025 include checkmark Vanguard, best for long-term investors; Fidelity, great for commission-free trading; Robinhood, best for beginners. Step 3. Research before you buy. Before buying a stock, always do your research. Ask yourself these questions. Is the company profitable? Does it have a strong business model? Does it have a history of growth? If you don't want to pick individual stocks, there's a simple solution: index funds. What's an index fund? It's like a basket of stocks. Instead of buying one company, you invest in hundreds at once, like the S&P 500, which has delivered an average return of 10% per year for decades. Now you might be wondering, what if I invest and the market crashes? Great question. Let's talk about risk management next. Part 3. How to avoid risk and protect your money. Investing is not gambling, but people treat it like one when they make these mistakes. Buying stocks based on hype, FOMO investing, trying to time the market, investing money they can't afford to lose. To invest safely, follow these golden rules. Diversify your investments. Never put all your money in one stock. Invest only what you can afford to leave untouched for 5+ years. Keep emotions out of investing. Think of Warren Buffett, the world's most successful investor. Do you know what his favorite investment strategy is? Buy great companies and hold them forever. That's it. No complicated trading, no chasing trends, just patience and discipline. Speaking of patience, let's talk about compound interest, the secret to long-term wealth. Part 4, the power of compound interest. Imagine you invest $100 per month in an index fund that grows 10% per year. After 10 years, you'd have about $20,000. After 30 years, that grows to $200,000. After 40 years, you'd have over $200,000, $600,000. That's the power of compound interest. Your money makes money, and that money makes more money. Now remember the question I asked earlier. If you had invested $1,000 in Amazon back in 2000, how much would it be worth today? The answer? Over $2 million. That's the power of investing early and letting time do the work. So the big question is, how do you get started today? Your next steps. If you've made it this far, congratulations. You now know more about investing than 90% of people out there. Now here's what you need to do. Step 1. Open a brokerage account, Robinhood, Fidelity, or Vanguard. Step 2. Start with just $50. Buy an index fund like the S&P 500. Step 3. Invest consistently every month, whether the market is up or down. Step 4. Be patient and let compound interest work its magic. If you follow these steps, your future self will thank you. Now let's make this interactive. Comment below. I'm starting today if you're ready to take action. Also, don't forget to like, subscribe, and turn on notifications so you don't miss our next video, where I'll reveal the top 5 stocks to buy in 2025. Your journey to financial freedom starts now. Don't wait. Take action today.